Morning Trade Live. We're live on the floor of the New York Stock Exchange ahead of a three-day weekend where markets and stocks are under some pressure, though up off the lows of the day. Now, we are in the midst of earnings season. I won't say the thick of it because I guess some of it is really past, but we still have a lot of key names that we're watching, particularly in retail. And that brings us to Chartmaster. JD Durkin is here taking us through the fundamentals, sitting with me here at the desk. And Rick Ducat will go through the technicals on these three reporting names next week. Many of these retailers have been withdrawing guidance or being a little tepid. And we'll start with Dick's Sporting Goods, JD. This is a name you're watching. What are the fundamentals? What are people watching
Yeah,
for?
exactly right. And to speak about how far we into earnings season, obviously a lot of emphasis will continue to be on NVIDIA, but we don't want to forget what's going on with these major retailers, all of which that we're going to talk about today, Nicole, are facing tariff or trade policy related uncertainty. They tend to manufacture in places like Vietnam and China and Cambodia. Comparable story here for Dick's Sporting Goods. In terms of earnings per share, the expectation indicates a dip of about 2% from the year ago quarter, but we are expecting to see revenue rise about 3 to 3.5% from where we were this time last year. The good is that the company really seeks to create what they call an omni-channel athlete experience, a diverse product offering for their athletes. Of course, the challenges here for a company like this, like we said, those really difficult macroeconomic set of circumstances, and the tariffs there. Of course, their biggest companies that they carry include Nike, they include Under Armour. We understand, we've talked so much about the pricing pressures that the Nikes of the world are facing. Even if Nike didn't go quite the Walmart route and explicitly blame the president's tariff policies, a lot of these companies, Nicole, we know they are in a situation where they will have to pass down cost onto those consumers. We'll have to wait and see what that means for Dick's next week.
Understood. All right. So what do you think, Rick, when you take a look at this chart for Dick's?
Ross Stores also blamed tariffs for their earnings-related woes as well. So just another thing to think about there. Dick's Sporting Goods, though, we can see that the downtrend that began with the 52-week highs, 254.60, was briefly broken here. We had a big push to the upside, but it failed to crack above this pink line near 220. We can see that that was a double bottom type of pattern here before we had our large breakdown, and sure enough, price failed to close above that level. Now we can see that price is once again approaching this area of the previous lows. 166.37 was the intraday lows. So far, we have not yet tested it or broken down to the downside yet here, but momentum is slowing down. We are below the 50 midline, and we have given up our green trend line here for the RSI. If we were to look at our volume profile and standard deviation channel studies, we can see that this area right here, our red line near 188 that marks a gap and a post-gap high point, matches up with our plus or minus 1 standard deviation channel, our 21-day exponential moving average, and a volume node. So 188 to the upside is a key level. We have already slipped below the -2 standard deviation channel here, so that area near 169 could be important as well. On a longer term chart, 147 was a series of highs going back during the past 5 years. That's also where volume starts to really pick up again.
All right, so that's Dick's for you. And making also, didn't they recently buy something just the other day? Dick's, they were interested in making a purchase. I'll think about that. In the meantime, we'll move on and we'll talk about Abercrombie & Fitch. What do you think about this one?
Well, we're seeing shares under pressure today, down more than 2%. Shares down 50% or so year to date. And a comparable story, I think, from what we laid out with Dick's there a moment ago, in terms of a lot of manufacturing, heavy exposure to Vietnam and Cambodia. On the earnings side, believe it or not, this indicates what would be about a 35% year-over-year decline from the same quarter last year, though indicating maybe a 3 to 4% year-over-year jump on the revenue side. Historically, Abercrombie & Fitch stock has traded down 60% of the time following its earnings announcements. The company does perhaps have some strengths going for it, Nicole, in the minds and hearts of a lot of analysts, citing operational strength, solid market position, of course, longtime brand loyalty for higher spending consumers that kind of grew up with the name in the heart of the retail shopping mall era. But of course, growth is expected to moderate a bit here in 2025, given those tariff-related headwinds out of Vietnam and Cambodia. We are seeing Jefferies maintain a buy rating on the stock, but analysts, they are lowering the price target from 170 down to 135. We'll hear what they have to say Wednesday as well.
Yeah, and I saw Morgan Stanley saying they anticipated a miss here for the quarter. And while Urban Outfitters had some bright spots, American Eagle, I mean, they really had a mishap. The CEO even acknowledged some missteps, but the whole tariff story, too, weighs on these kinds of names. Rick, take a look at this chart, which, I mean, it went down to $65 from almost $200 this year. Your thoughts?
Yeah, and you know, the last earnings event here is kind of where I started to focus. You can see the previous quarter here, we had a gap down on very heavy volume here. We had a volume spike there. From there, I mean, from the place that we closed to the place that we hit the low, the stock lost about a third of its value, bottoming out near 65.40. So we have made a little bit of progress above this very modestly sloping trend line that we have here, starting with the post gap down highs. We have also briefly pushed above our yellow 21-day exponential moving average, but it was not to be so far. Now that's proving to be a resistance level for price today. That comes in near 75.37. RSI also showing signs of disruption here, hanging out near the 50 midline, hanging out near the trend line, but a rather uncertain picture right now. We can also see that we have a fairly clear range to keep an eye on, though. We've got our gap level and our lows, so about 64 to about 92 in the shorter term. If we were to also assess our volume profile and standard deviation channels, we can see heavy trading at these low levels after earnings, which reflects kind of that range-bound activity here. So that volume node comes in near 80, also roughly lines up with our linear regression line, our line of best fit, which is an idea of fair value for some traders. So that is often viewed as a sign of an important bottom being formed, but that doesn't mean it will hold necessarily. We could still move lower. You can see that in the longer term, all the heavy volume is way down here near 40 to 20 or so. So we are, the volume node here looks very slight relative to that.
All right. And by the way, I did look. Dick's is buying Foot Locker. That's what it is. I knew, I mean, how can we keep up with every single story? That's what it was. And I remember being like, wow, what are the synergies here? But Truist noting, we believe we saw an opportunity for Dick's to acquire a business that's earning below its potential. So in the current environment and with Nike and all that. So very interesting there. That could provide some, you know, they have to have the integration and all that with Foot Locker. So that's the Dick's story I was thinking of. Last but not least, let's get to Best Buy earnings.
Yeah, we're seeing the stock down under pressure today, down 1.3%, down 19% year to date. And a comparable story we've been talking about for a lot of these other names. Maybe a bit, you know, analysts seem to have that maybe one of the advantages to the company is its adaptation in the general tariff exemption sort of environment, but it is also vulnerable to trade policies at the same time. One analyst saying it faces harsh headwinds since most of its retail items are imported from China. Other analysts inclined to say, given the scale of its business, given the challenges, its revenue exposure overseas, that is a company that tends to be a bit vulnerable to the recessionary conversation. However, a few other analysts are pointing out when you talk about potential tariff exemptions on things like smartphones and devices, we have heard so much of a back and forth from the Trump White House where perhaps some of those easing of restrictions, for instance, you take into account the news about Apple this morning from President Trump, a lot of analysts say, well, maybe that doesn't necessarily hold, and the president next week can tweet something positive about Apple. Those are the sorts of back and forths that may work against Best Buy, or they may work in the company's favor here. We will get those earnings on Thursday, and we are expecting both earnings per share and revenue to be light relative to the year-ago quarter, Nicole.
Right, understood. Okay, your thoughts on the chart, please, Rick.
Yeah, so this one, there's some very prominent horizontal levels to consider. So if we were to backtrack, 81.50 marked a notable low point around this general area. Then once again, it was tested several more times throughout the year. So importantly, after we had our last earnings gap down, once again on heavy volume, that was the high point. So 81.50 is a high water mark that hasn't really been breached yet since that point. But, you know, we've declined notably since then. We can see that this was another low area here, 70.21 or 70.25 after we had our push to the downside, then a further gap down, bottoming out just below 55. Now, price has struggled to retake that old low level near 70.25. It was looking like perhaps we were going to hang on, but now struggling to hang on to our yellow 21-day EMA. You could show a trend line here. We haven't had a lot of particularly helpful trend lines, but this one, in the shorter term at least, shows that things do indeed seem to be making a further move to the downside here. When we look at volume once again here, a small node down here near 60, but we're approaching a larger one near 72. So even if price were to push back into that area, we still have our orange 63-day EMA and our linear regression line, which is our idea of fair value. Notice that in this case, we are far below the volume profile point of control for our yearly basis. That comes in near 87. A 5-year chart shows that, well, in this case, the long-term volume is right about where we are now. So 74 looks like an important longer-term point to keep an eye on here. And really, we just hit those 5-year lows. So the situation has not been very good. We broke through that 64 level that represented a double bottom.
All right. Good to see you both. Thank you so much. A good preview for next week for some of those earnings, not just NVIDIA next week. We have some great retail numbers to focus on. JD Durkin here and Rick Ducat. Thank you.